Hello, it's Rhonda Thomas, and we're just about to do Personal Finance, Chapter 10's Static Problems. So I will share my screen. Okay, Chapter 10 is all about insurance. So we're going to start with home insurance and auto insurance after that. So that's within this chapter. Okay, so there might be some new vocabulary to learn. So a policy owner is the one that's insured. The insurance company is the one that would pay you if you file a claim and you meet the claim requirements of the policy. All right, so let's get started. Number one, many home insurance policies cover jewelry for $2,000 and so silverware for $5,000 unless items are covered with additional insurance. Okay, so if $7,600 worth of jewelry and $5,600 worth of silverware were stolen from a family, what amount of the claim would not be covered by insurance? So the first thing you want to do is put the amount down to figure out how much you lost or how much was lost. So we have $7,600 in jewelry. We have $5,600 in silverware. So we have a total loss of $13,200. The insurance policy has a limit, which means they will only pay up to a certain amount. Okay, of $2,000 for the jewelry, $5,000 for the silverware. So once you know what your total loss is, then you subtract your limits. Okay, and if you want to replace the silverware and the jewelry, the amount that's not going to be covered is $6,200. Okay, $6,200. So that's out of pocket, right? So it covered 7,000 of that. So about half of it. You say, how do you keep that from happening? Well, you look at your policy and up the amounts of the limit, but you will probably pay more for your policy. When you pay for a policy, it's called a premium. It's the price, it's the payment, premium, payment to activate insurance. Premium, payment to activate insurance. Okay, number two. What amount would a person with actual cash value coverage, there's a certain characteristic of a policy called actual cash value, ACV, receive for 2-year-old furniture destroyed by a fire? So a lot of times insurance companies will take into account how old the asset or the furniture is. The furniture would cost $2,000 to replace today and had an estimated life of 5 years. So you put your replacement value down, which is 2,000. You're going to divide by 5 years of an estimated life. So each year that furniture should depreciate in value about $400. And they talked about 2-year-old furniture. So 2 times 400 is 800. So that's 2-year depreciation. So if the actual value, replacement value is 2,000 minus 800, means that you should get an insurance payment of $1,200. Okay, but you'll have to come up with the other 800 if you want to replace it for yourself. Okay, so actual cash value, that takes into account the life of the furniture, how old something is, as to, so something that's supposed to last 5 years, if it's beyond 5 years, then you won't get anything. Number 3, what would it cost an insurance company to replace a family's personal property that originally cost $84,000? The replacement costs for the items have increased by 15%. Okay, so what's the original cost of the property? $84,000. we have a cost increase of 15% or 15% inflation. Okay, so 15% of the original cost is an extra 12,600. So if they lost all of their property or all of this $84,000 to replace it, it would take $96,600. Okay, so let's put that amount in, 96,600. A quicker way is to take the original amount and take it times 115%, which gets you the same answer. Okay, that gets you the same answer. So just a second, let me check my work here. Okay. That looks okay. All right, let's move on to number 4. Okay, this one is about home insurance. Okay, so there's different characteristics of home insurance and you have to be careful. So if Carissa has a $260,000 home, so I put that down as home value, it's insured for $200,000 based on an 80% co-insurance provision. So we have an 80% co-insurance. That's a term of the policy. And they have a claim. How much would the insurance company pay on a $10,000 claim? Okay, so the first thing we need to know is what is 80% of the current home value? Home current value. Okay, so that's the co-insurance limit. That is the amount that the insurance policy, that's the limit that they'll pay, 80% of the home value. Okay, so now we take insurance value of 200,000 divided by the co-insurance limit. So it's 200,000 divided by 208,000 times the $10,000 claim. And it turns out that $9,615.38 is the amount paid by the insurance proceeds. Okay, the insurance proceeds, $9,615.38. Sometimes they use different words. So amount paid, that's also known as the insurance proceeds. Okay, now we're going to talk a little bit about deductibles. So deductible is the amount that you deduct from the insurance proceeds. Insurance proceeds are paying a claim. Okay, so the first one is wind damage of 1,670. We have a deductible of 1,000. So the payment from the insurance company, the claim proceeds amount paid is $670. Okay, an entertainment center that costs $2,300. The insured has a $500 deductible. So when you subtract the deductible, that leaves $1,800 for the insurance company to pay. Okay, so, and then the last one is vandalism that does $850 of damage to a home, but you have $1,000 deductible. So here's your vandalism. Here's your deductible. And you get a negative number. So the damage is less than the deductible. And when that's the case, it's not worth filing the claim. It's not worth filing the claim. Okay, so I'm sure you've heard the terms meet a deductible. So if a claim doesn't meet a deductible, then there's really no sense in filing a claim. A claim is the amount of damage. You're filing a claim. Okay, number 6. When Carolina's house burned down, she lost household items worth a total of $50,000. Her house was insured for $160,000. Her homeowner's policy coverage provides for personal belongings up to 55% of the insured value of the house. Okay, so there's the loss. But here is the current value, total policy insured value. That's 160,000. We're going to take that times 55%. So the coverage limit of personal property is like clothing, furniture, equipment, items in the house. Okay, so the coverage, which is 55% of the insured value, is 88,000. Okay, 88,000. Okay, and her loss was 50. So yes, the limit would cover her $50,000 loss. Now, if she had a $100,000 loss, it would cover it up to 88,000, and she would have to come up with the rest. Okay. All right. So let's just double check my work here. Make sure I'm right. Okay. Next one is, this is 7 and 8. Okay, 7 and 8. So some homeowners insurance policies start to give you discounts if you do certain things to help protect the home. So Matt and Kristen are newly married and living in their first house. The yearly premium on their homeowners insurance policy is $450 for the coverage they need. Their insurance company offers a 5% discount if they install deadbolt locks on all exterior doors. The couple can also receive a 2% discount if they install smoke detectors on each floor. They have contacted a locksmith who will provide and install the deadbolt locks on the exterior doors for $60 each. So there's 2 exterior doors for $60 each. At the local hardware store, smoke detectors cost $8 each, and the new house has 2 floors. So you'll want one on each floor. So Kristen and Matt can install those themselves. So what discount will Matt and Kristen receive if they install the deadbolts, right? Okay, so the deadbolt, let's just see here. The deadbolts, 5% discount. Okay, 5% of the annual premium, 5%. So they'll save for the deadbolts $22.50 and 2% of $450. Okay, so there's your discount of $9 for putting up the smoke detectors. So the new amount of their premium is $418.50. So they saved. Okay, so let's just double check this. Okay, let's just double check it here. Yep. Okay, yep. So all in all, they're going to save. Just a minute, I gotta return here. Okay. Okay, they're gonna save $31.50 each year. I added those 2 together. You can highlight 2 cells if they have numbers in them, and you can look down here, it says sum, $31.50. Okay, so that's not what they wanted. They wanted to know how much they were individually, the annual discount. One was 5%, one was 2%. Now we're going to go to the next one. This has to do with number 7. Okay. Assuming their insurance rates remain the same, how many years will it take Matt and Kristen to earn back in discounts the cost of the deadbolts and the cost of the smoke detectors? So we had to buy those deadbolts. They're at $60 a piece. So that means we spent $120 on deadbolts, and we're getting a discount of $22.50 each year. So it's gonna take 5.33 years to recover the cost of the deadbolts. Okay, but after then, they should start saving money. So deadbolts, 5.33 years. Smoke detectors, not so bad. The smoke detectors cost $8 a piece, so that means we spent $16. We're getting a $9 discount. So it's going to take 1.78 years, almost 2 years, to recover the cost. So definitely the smoke detectors are worth it. Even if the deadbolts aren't, the deadbolts take longer to recover. Okay, so, all right, let's go to number 9 now. Okay, now we're going to learn about auto insurance coverage policies. And oftentimes you see what looks like a strange division problem. Okay, so this says Becky has 25, 50, and 10 automobile insurance coverage. If 2 other people are awarded $35,000 each for injuries in an auto accident in which Becky was judged at fault, how much of this judgment would the insurance cover? So let's understand that when you see 25-50 or 25 /50 /10, I'm sorry, that's forward slash. Okay, that is describing the 3 limits. And these are in thousands. So it's 25K, 50K, 10K. So it's really 25,000, 50,000, 10,000. And then here are each of the 3 categories. The limit that they'll pay for one person's injuries, the limit of all people's or person's injuries, and then finally property. Okay. So Becky's out of pocket. All right. So the 2 people says if 2 other people are awarded $35,000 each, that's the $70,000. So let me put this in here so that we remember why it's $70,000. So 35,000 times 2 people injured equals 70,000. So that's where we're getting that number. Okay. So the limit for all people, if it's more than one, it's going to be 50,000. Okay, that's the payment. So the payment will be 50,000, but Becky's out of pocket, if they would have asked, is actually 20,000. Okay, so just a second here. We will double check my answer. Make sure I'm on the right track. Okay, we're ready for number 10. So we're doing automobile insurance again. We've got 50, 100, and 15. Okay, that's the kind of auto insurance Kurt has. One evening, he lost control of his vehicle, hitting a parked car and damaging a storefront along the street. The damage to the parked car was $5,400 and the storefront, $12,650. So total damage from this accident is, okay, is $18,050. Okay, total damage. There we go. But this, remember the first number is for one person, all people, property. Okay, property, there wasn't anybody hurt, thankfully, because he just hit a parked car and a storefront. Well, 15,000 is all that's going to get. So what will the insurance company pay? 15,000. Okay, 15,000, and that means Kurt is going to have to pay the remainder, the remaining $3,050. Okay, so all right, let's go to number 11. Okay. So we see commercials like this all the time on TV. Beverly and Kyle currently insure their cars with separate companies, paying $1,300 and $1,150 a year for their premiums. If they insured both cars with the same company, they would save 10% on the annual premium. What would be the future value of the annual savings over 10 years based on an average interest rate of 6%? So let's go ahead and put in their plan. Okay, so let me put in Beverly's plan is $1,300. Kyle's plan is $1,150. $1,150. So we've got $2,450 altogether. 10% is an annual savings of $245. Okay, we're going to put that in as a payment. The zero there, and I'm going to go try this with the calculator, and interest is 6% for 10 years. So this is going to be table B, which is your future value of an annuity. Okay, so the payment equals the 245. I will go get this. Okay, so I think I've got the table open. It's table B for future value of an annuity. We're looking at 6% for 10 years, 13.181. 13.181. Okay, so it looks like it will grow to 3,229.35. Let's test it with the calculator. So present value is 0, making payments of the savings. Remember, we're going to save on our insurance. So we're going to save $245 every year. If we do that 10 years in a row, then how much would we have? Let's see if that's close. Yes, $3,229.29. So either one should work. Okay, and I didn't put that in here. 3,229.29. Okay, so here's how much the calculator says. Either one of those should work. Okay. Number 12. Eric and Susan just purchased their first home, which cost $390,000. They purchased a homeowner's insurance policy for the home for $350,000 and personal property for $75,000. They declined any coverage for additional living expenses. The deductible for the policy is $1,000. So let's put down what's going on here. So the home value, $390,000. It's insured for $350,000. Personal property is insured for $75,000. They have $1,000 deductible. Okay. Soon after Eric and Susan moved into their new home, a strong windstorm caused damage to their roof. They reported the roof damage to be $19,000. So I'm going to put $19,000 there. And then we're going to subtract our deductible of $1,000. It says, while the roof was under repair, the couple had to live in a nearby hotel for 3 days. The hotel bill amounted to $640. Assuming the insurance company settles claims Using the replacement value method, what amount will the insurance company pay for the damages to the roof? Okay, so damages to the roof. So it should cover $18,000 once the $1,000 deductible has been taken out. Let's see if this is right. Yes, so that's how we figure out how much the insurance company will pay on a claim, is we have to know the particulars of the policy. Okay, last question is another automobile policy. So we've got Eric's Ford Mustang and Susan's Toyota Prius are insured with the same insurance agent. They have 50, 100, 15 vehicle insurance coverage. The very week of the windstorm, Susan had an accident. She lost control of her car, hit a parked car and a damaged storefront. The damage to the parked car was 5,300 and the damage to the store was 16,500. So let me put this in. So 5,300 and then the store was damaged. So the total property damage, 15,000 is the amount for property. So insurance covered amount. So the amount that it covered was $15,000 and then that's it. Okay, so if she had to come up with the rest of it, that was another $6,800. But your insurance policy only covers up to a certain limit. Okay, that is it for chapter 10. Okay, that's it for chapter 10. Oop. Thank you very much. We'll see you on the next video.